If you're trading the crypto market right now, you have to watch this video. I'm not wasting any time. Let's go straight into it. Quick look at the monthly chart, and you can see macro trend favoring bears, but we can see that the recent almost year of price action is dominated by the bulls, namely these two huge candles over here. Zoom back into the weekly, and what I'm going to try and do is show you my thought process for how I'm going to predict where the price is going to go. And no, these aren't absolute predictions. I'm not an oracle and I don't have a crystal ball, but these are predictions that will help inform my trading decisions and make me more money. On the weekly, there are a few key levels we want to watch. The most important structural level right now, in my opinion, is the 25K level. Why? Because this 25K level represents when the market shifted from bearish both in the super high time frames and the medium term to neutral in the medium term, bullish in the short term, and bearish in the super high time frames, still a little bit bearish neutral because we haven't quite undone all this down move here. So with market structure, you always set yourself a series of highs. Every time the price goes down, crashes down, and you set yourself a series of lows as well. And you can see that these lows kept getting more and more every time the price went down. Now, normally what happens is the trend ends up weakening, and at some point, these moves get less sharp and shorter. And then recovering one of the shorter moves isn't that big a deal. But recovering a significant percentage of the moves, which in this case was both of these two, is very significant and shows the market is finally starting to make higher lows. You can see this low here is higher than this, and then this high here is going to be higher than this and this. Now, one thing I'm slightly concerned about, especially if we go back into the monthly, is that this is a pretty healthy normal retracement, and it's gone straight into and is rejecting right now off the 236 level. You can see on the monthly, suddenly this 25K level becomes a little bit less significant. The key structural levels look a little bit more like this. And right here, this could be nothing more than another lower high, with the previous high being around up there. So that's something in favor of the bears that we want to be aware of, and I'm definitely curious to see how we do overcoming a key resistance over here. And you'll see multiple confluent factors on this resistance, which a lot of people are ignoring. Now, I am bullish and I have been trading this bullish, but we can't ignore the bearish arguments. See, when I trade, I don't use too many indicators and I keep things really simple. That helps me keep things consistent and make a lot of money. I use trend analysis, candlestick analysis, and supply and demand areas in order to find key levels. Now, our key demand area right now is going to be over here at this 25K level. So this is where you can expect people will buy. I highly doubt that the price is just going to crash straight through this level. Then our key supply area is going to be over here. That's really wide between this 30K and 28K. Given the recent price action, we can actually take that down and make it between 28 and 29K. So we're bouncing between these two levels on the daily. So price really wants to do one of two things. It wants to crash down here and hit or test this lower demand area over here, and then likely bounce and break down to here, or alternatively, it wants to go above this area. Now, I know that's not useful. Price can go up or down, but if you know what to look for, it can be extremely useful. This gives us options to trade the market. Zoom into the 4 hour, and suddenly we can use this information a lot more effectively to find potential trades, because this lets us now set key levels. Over here, I can set myself a breakout level, because remember, I know that if we get above this area of supply, then likely sellers will be exhausted. That means we get above this, then everyone who wanted to sell likely has sold. So price will either continue up or it will bounce back down and then go up. What happens is once we exhaust one area of supply, the price will then go to the next area of supply. The next area of supply on the daily will be over here around the 32K level. So we'll be targeting something closer to this, maybe even a little bit lower, right around there. So just below the 32K level is the next area we're going to, and then perfectly confluent with the 382 over here is the next area we're going to. If we swap out to the weekly, we'll be able to get some clearer levels here. You'll see this over here lines up really nicely with these two data points, and then 382 over here really lines up nicely with the other data points. You see how the picture's starting to form, and we can start predicting where the price is going to go. But it's not a real prediction. We're not just going to buy here and sell at these levels. We're planning out routes and scenarios. All of this information comes together to give us potential trades that are high probability. Then we will journal these trades and our reasonings for taking them, and we will spot patterns. We will see, normally when we break an area of supply and I bet on the price going to the next area of supply, I make money. However, when I normally bet on an area of demand holding and bouncing, I end up losing money. As you take more and more of these trades, if you make good notes, you will spot patterns which make you money, and then you will only do those. I know which one of these make me the most money. That's why I can be more accurate than more people. I have an edge in the market. So back to the 4 hour over here. What's been happening? You can see the price has just been bouncing between these two levels. And if we kill this area, also get rid of this level. Let's now focus in on the lower time frames because we set our higher time frame bias. We've got about 8.45 over here. This is the level I'd set, maybe a little bit higher. Yeah, right there, 28.5. And then down here, we can set a level at about 27 or just below 27. These are the levels the price is bouncing between. Now, we haven't had any serious attempts to break out of these two areas, and you can spot that by just bringing in a short-term moving average. Here on the 4 hour, no point has this moving average gotten close to getting above these lines, nor have we had anything more than one quick candle close below these lines, so no confirmation of us getting out of this established range. So, people are selling here, people are buying here. If people don't buy here, they want to buy here. If people don't sell there, they want to sell there. What you can also do is analyze the candlestick movements within this. Right now, this is a pretty equal battle, slightly in favor of the sellers. How do you know that? Just look at which candles dominate the charts. Huge selling candle over here, multiple bullish candles needed to get back up. Then if you just look at the percentage of bearish candles here, the bearish candles are more frequent, the bearish candles are more dominant. Now, if you analyze these candlesticks, you can actually find yourself really good plays. For example, after you see a sell like this in a range, who's winning the battle, the bulls or the bears? Who is winning the war? Who has more dominance here? Well, obviously this bearish candle here. I mean, look at this. This is you. This is the guy she tells you not to worry about. So what we're going to do if we want to take a short-term trade right now is bet on the bears. Now, there's two ways we can bet on the bears. If we get confirmation below this level, we can bet that the price is going to come back down to here. That's bear play number one. Bear play number two is if we bounce up into this resistance over here, we can bet that the price is going to come back down over here. That gives us two potential plays. So if you're building a trading system out of this, you need two things. One, you need confirmation for this over here. And two, you need a system for betting on this level here. You need three things to bet on this level. You need an entry into your position. So I enter my short position here. You need an invalidation. Now, a lot of people are going to set their stop losses right here at the local high, the top of the wick. So normally I like to go a little bit above that. Then you set yourself a trade coming down. I normally like my trades to have at least 2R in the ratio. It just works better with my systems. So we've got a short setup over here. The bears are winning the war and the price comes back up right now. We can take this short. It doesn't matter if we're wrong this one time. The point is we want to make more money than we lose over the course of 100 trades. We're not trying to be right every time. And this is an example of how you set up a trade using these two levels. And if you watch, price goes up, you can see this is really weak from the bulls, hits our level, we don't get stopped out, comes back down, and we take profit here. Now price is going sideways. The bears have a little bit of control, but not quite as much as they did before. So in a situation like this, I'm not looking to take the same bet as I did last time. This price action is way too neutral for me. I would much rather see either some sort of sign that the bulls or bears have taken control, or I want to see a break of this level or this level, and I'm going to bet on us going to the next most likely areas. As you can see, the distance between this and this is much greater than the distance between this and this. So I'm going to make a lot more money if the price goes up, and I want the price to go up. Also, I'm more probable to make money if the price goes up. Now, why is that? Well, if we go back to the 1 day, we can see that the short-term structure is bullish. What does this do? This shifts our bias meter more towards the bulls. We had one break over here, but it was very quick and we recovered it. And since then, structure has been in favor of the bulls and keeps going up. Market sentiment is also something you want to take into account, and right now that is in favor of the bulls as well. With all the fear around banking, the use case for Bitcoin crypto is through the roof right now. If you're planning on taking any of the trades I share or are interested in trading any of these assets, do check out Phemex. It's my preferred crypto exchange right now, and you get a bunch of bonuses if you use my link in the description below. So now let's take a look at Ethereum. I've been preferring trading Bitcoin mostly right now, but you can see situation is very similar for Ethereum, maybe even a little bit less bullish than Bitcoin. We've got a huge resistance coming up here at the $2,000 level. And if we zoom into the lower time frames, let's go to the 4-hour, we can establish our range a little bit higher over here between about 1720, and on the upper end, bring it down to about 1850. So these are the two levels we're playing between, and you can see the candle war here is a little bit more in favor of the bears. I'm seeing a lot more big bearish candles than I am big bullish candles. And also what you can do is use your Fibonacci levels and draw yourself a midpoint here. So what this midpoint helps you do is, you can imagine that we've got a really big magnet here and a really big magnet here. When the price is above the midpoint, it's likely to be a bit more drawn to this magnet there. When it's below the midpoint, it's likely to be drawn to this magnet here. When you see it get rejected off the midpoint, that is an argument in favor of the bears, and price is likely to go back down. Now you can do much lower time frame, let's say 1 hour intraday scalping using this sort of method. I generally prefer to play higher time frames right now just because of lifestyle preferences, but there are huge advantages to trading lower time frames. You get a lot more experience in quickly. It helps develop your trading muscles, train your emotions, helps with pattern recognition. So don't be afraid of trying these concepts out on lower time frames. So for Ethereum, I actually can see some clean trades break out above this midpoint level here. And also if we get a break of this level here, we can go quite far down. I can see the 1600 level is one of the next most significant. Let's zoom out to the 1 day, see if it holds up there as well. Not quite as nice on the 1 day. But again, this is why I don't quite love trading Ethereum as much right now. I just find Bitcoin has much cleaner levels. I know this isn't going to get as many views as my videos normally do, but this is for the people trying to actually learn how to trade, who want an in-depth understanding of supply and demand in different trading strategies. So if you made it to the end, you're probably serious about your trading. And I'll keep sharing content to help you out. But if you ever need an extra hand, you can always hire me and my team for coaching, or get access to some of our trading servers where we just prove every single week with testimonials and members winning hundreds, thousands of dollars that we know what we're doing. That's everything from me. I'll see you again either Wednesday or Friday.